check if you are on. Yeah, I can see we are now on. I can clearly see we are on. I can see clearly we are on. Let me confirm if sound is to the point. That's what I want to confirm. When the sound is fine. All these doing things. Let's confirm if we are there yet. I'm waiting for people to join. Then we'll be continuing just in a moment. I don't intend to keep you guys here for a long time. Today we're just going to have the first session. We only do we always do 3 hours. Those who've been here, they know you normally do 3 hours. So they're going to do an hour and a half. Then the rest also try to see how well we can fix it and finish. Right? So I want to see how far we are going. So I just want to check on my end and see if the volume is okay. All right, so I think everything is okay, everything is fine. So let's go it. Let's go to it. Now, as you always know, I normally start my week, and I've said this more and more again that I normally start my week on Monday. I don't do anything over the weekend. That is my take. I don't know what people say, but that's my take. I don't do anything over the weekend. All right. Weekend is resting time, time to rest and reflect. I don't backtest. I've talked about backtesting and everything that people preach about backtesting. I have talked about it, so I don't backtest on weekend. Weekend, as I've always said, weekend is a resting day. Weekend is a resting day. Just have some time off the market. Don't have to do forex every day, every single day of the week. Saturday have a rest. Sunday go to church. Monday rest in the morning. Then in the evening during New York time, that's when I start my trading. Why? The reason I don't analyze the market on weekend is because of the uncertainties when it comes to market open. Is because of the uncertainties when it comes to market open. At times market open with a lot of gaps, with a lot of manipulation, with a lot of accumulation and manipulation. So I might really want to see and wait and see how the market is opening and a clear trend that I'm getting. However, if there is a trade that or a clean setup that I saw on Friday, okay, and it didn't touch my zone, so it was a trade that I was really waiting for it to activate. Then it happened, it slipped into the weekend. That's when I check the market in the morning to see if it has come to my zone or not. But like that, that's the case for what I've used. So we're going to start a week. Um, this is my week one of trading. I normally do 10 week challenge of trading. Can see those challenge A, this is challenge B, as you can see clearly from this case. So this challenge B, I normally do 10-week challenge, 10-week challenge. I know depending on your case, some do quarterly, some do monthly, some do weekly, some do what have you. I normally have a 10-week trading uh, challenge, and every week I only target 4% growth. So right now I'm starting with an account of $9,700, and my target is 4% in this case, which is only 388 bob in this case. My mantra, as you can see clearly, it is patience, consistency, and faith. That is my mantra. Now, I think also time and time again I've shared with you this model of grouping your pairs with the same denominator. Let me say quote because of the quote currency and the what's the other one? The base currency. So I normally group them like this one. The advantage is when you group them like that, you can clearly notice a common trend between them or among them. You can clearly see a common trend and able to know or even try to understand your move. So, for example, if JPY, if the BOG Bank of Japan has intervened in the forex market, you'll be able to see a uniform cross happening throughout the pairs. All right. I don't say that these pairs are positively correlated, but when you're analyzing them together like this one, you're able to see a common pattern between them. So I'm having one with JPYs, I'm having other ones with the CHF, then I'm having another one with the USD. So these are the only pairs that I normally look at. All right. Now the pairs that you see, I'm coloring them blue like this together. It means these one are strongly correlated, at least according to my analysis and the way I've been seeing them moving time to time. They tend to move in the same direction. So in this case, I don't take most cases both trades together. So I'll only trade one which provides a high quality setup. So I don't trade CAD JPY and USD JPY together in most environments because they have proved to me they are almost moving the same way. All right, according to me, not according to your things or whatever. So in most cases, they do that. So another thing, at times also I used to take my analysis because if they are not 90% correlated, they are about 70. So it means to some extent we should see some similar movements. Hata kama sio exactly the same, at least we should see some similar movement. Here I've not seen any. Then here you can see these are blue and these are green and green. It means also the first two, they show some correlation, which is more than 8 or 80%, and also this one. So I don't trade like them collectively. I trade 2 out of 4. Get the point? Right. So in this first half, we're going to try and look at these pairs. I'm just going to focus on the higher time frame only. If you see an entry, I can be able to advise on that. But for now, just going to look at higher time frame. We're going to start with the GJ. So you know what we normally do? We come to the GJ here and write our higher time frame. Which what have I done now? Okay, higher time frame like that. That's the higher time frame. That's the higher time frame. Higher. So when we come to the chart, let's see the higher time frame for GJ. Let's see the higher time frame for GJ, what it has to say for us. Let me just clear these things here so that I'm able to share with you the insight. Now, those who know me, I've come up with a trading strategy, which is actually a combination of price action, and price action and what else? And ICT concepts. So we majorly start our analysis from the 4-hour time frame, but just to be on the safe side, because you're starting the week, you know, you're starting the week, perhaps just want to know where weekly we are standing at. So currently, there's no major zone actually we are trading from in the weekly time zone. Um, Perhaps might want to see price continuously maybe reacting from this zone, of course, but from the previous week, I see price has been just pushing up, 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 and of course, maybe perhaps we expect price might as well in the long term, the long term maybe wants to go up, but in the short term, perhaps might be able to see a rejection from this supply here. We're able to see more rejections coming down like that, but that's a long term trade in that case. So from the daily perspective, again, we're in a very clean uptrend. We're in a very clear uptrend. If you want me to draw for you, let me just from here, you can see price pushed up, down, internal structure, now pushed up like this one. Perhaps we're having a retracement to a zone right here, right? So right now we're anticipating perhaps a retracement. That's what we are trying to anticipate. Our target pips is more, if we say something like 5 and above, we are good to go. This one is giving us even more than that. So we might be in for a retracement. Now we go to our higher time frame, which is our time frame of interest in this case. Now, what did you see? Clearly, I've learned to start liking drawing trend lines. Try just and see what the trend is because they give a very good picture of what the market is doing over there. So I want you to see a very good picture of what the market is doing. And I've just introduced this trading idea of using trend line. Instead of marking break of structure, it's easier to just put a trend line. Now, if your trend line has more than 3 touches, then it's a very good valid trend line. At least what's happened. So I normally put there's a rejection here. You seen that? What's happening? Another one here. Let's count them in a day. Another one is here. Another one is here. You have another one right over here. Then another one here. Another one here. Like that. So those are the trend lines. Okay, those are the whatever that you are seeing there. Just a minute, guys. So so sorry for that, guys. So you can see these are very strong trend line, like this one, like that price came to that particular point. Now this is price action. I'll tell you where ACT comes in. Now, but if you look at this particular market pattern, you can clearly see this was the high that was printed over here. Let me just show you. There was a high that was printed over here. I'm liking to use this arrow. So this one, there's a high that was printed over here. You can see market. The only other high that has been printed over here, definitely it is this one here, is here. And all along here, this is just an inducement. So we're having an inducement here. Uh, which actually because when the price broke below this one, came rested here, So it's an inducement there, and in that case, we have a strong supply over here. These are supply zone over here, just below upward trend line. Kuna supply zone there. So what am I expecting to see market doing right now? This zone here becomes my zone of interest because there's a fair value gap here. Now that is ICT concept. There's a fair value gap over here. There's a fair value gap there. You seeing that fair value gap? Fair value gap. I think that's fair value gap that's actually has holding the price here. But now I want to look at it as an inverse fair value gap because I want to take. I don't want to, and I'm not expecting buys in this market. Okay, wait, okay, I'm sorry for that. Let me just write it fair value gap for right now because you don't predict the market, anyways. Anyways, you don't predict the market. But to be honest, right now it's a fair value gap, but I'm looking to trade at it. I trade it as an inverse fair value gap. Why? This market, I don't think it will just pull up from here and continue going up. Because even from the daily time frame, we've seen that market right now is in a retracement, and we might want to take the advantage of this retracement from the daily time frame. So what I'm really actually I'm looking to see in this market doing, I'm looking to see market, can see market as there's a double top, a very clean double top there over there. Market has come down to this zone. It has come to tap the neckline of the double top without leaving any liquidity above here. So if you can get an entry model here, actually we can go. So the first entry we're going to take from here. Then another one, if market trace to this one, also can take an entry, and perhaps you can trade to this zone. Although I'm thinking there's a fair value gap here, so we might have a week to this case. All right. So in this market, we are lucky. Perhaps we can get an entry and see if you can take an early trade or our first trade for the week. So we're going to take a screenshot. I'm going to take a screenshot. This is GJ. Ikipeana signal mtu akose kuenda, that should be a problem now. That will be your problem. Pewe signal la daktari ukatae kuingia. Should I be there to be blamed? No. Right? So that's a very clean signal, and we're going to take that. We are lucky on this one because as a trade is coming. To our trade right over above there. So that is it for this one. So here, that's our analysis. The market has already come to our interested zone. As you can see, even the way I've drawn the pattern, the market already has. This thing is very slow today. From the way even I've drawn the pattern, you can clearly see the market has come to our zone of interest. Like that. So if you get entry confirmation on the lower time frame, we are going to take this trade, and I'm going to advise us how to take the trade. I'm going to advise us how to take the trade. All right. So number one, I'm going to go to 1 hour and see if you can see. Let me just move this on for now. So this is 1 hour time frame. So in the 1 hour time frame, clearly you can see market came and we had a sweep of liquidity. It's just a sweep of liquidity there about here. Maybe an inducement that was over here. Let's call it a sweep of liquidity. Market swept liquidity. Then we had an imbalance that market has tried to come and react from. There's this fair value gap here. Market is reacting from the fair value gap. That's why the market is reacting from the fair value gap. As you can see, is the fair value gap, where market is reacting from the fair value gap. And before that, you can see what market did. It came to this supply here, left a gap over here when it was opening. This is today, yeah. You can see the gap has been closed. Yeah. So everything is well sorted, and now the trade actually can run. All right. So once we get our confirmation, we can take the trade. We can going to have a very short. Tumechelewa kidogo, but it's okay. So you can just still enter there. I want us to put your stop loss just about here. About here, they're going to have. Can we get to 3? Can we get to 3? Yep. Can get a risk reward of 3 right there. All right. We'll take another entry when the market comes here. So yeah. So that is it. So that's an entry model. Can we get screenshot this? Screenshot this and share with you guys. Let's screenshot this one and say this one is our analysis time frame. So from analysis time frame, you're getting an entry already. I'm going to show you some entry criteria that I'm looking at. Are they checking? Now we have a liquidity sweep below this. No market. Look even how the market was doing. The market was coming like this from here to this level here, came to this level here, failed to close below above the zone here. We just wicking out a lot of blah 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 here. Now market has come down, collecting the liquidity there. It has retraced to a fair value gap over here, which is our entry. We are entering at a fair value gap. Of course, you know there's a supply to the extreme, so you're taking note of that. That's why your stop loss is kind of above the supply there. So that look at this is going to be our invalidation. When it comes to this zone, invalidation. So here we're going to boop, boop, enter like that. Let's see how our 30 candle mid closed. Also closing bearish. And now you can see a very good pattern thereabout. Came to this criteria case, try to come over here. Now finally tapping the zone, clearing inducement which was over here, tapping the zone, and now you're going to go down. It closed very much bearish, right? And see there's inducement here below the zone. Then the price just came to collect inducement and tap into the zone, and now you're going to go bearish, right? So the next thing is to be able to determine which lot size to use so that we are risking 1% of our account for this trade. So is first of all to get the stop loss. This one come a little bit up. Stop loss is about 76. I know you know for JPY it has a lot of pips. So 76 is not a lot. If you ask me, it's not that a lot. But anyway, go to lot size calculator. Lot size calculator. FX lot size calculator. I go to my stop loss. We are selling. So in this pair with my account, Um, Risking 0.09 would be fine to put this account into a 1% risk. All right. Now, 3 questions. I'm not trading on my main account. Why? Because of the timing right now. Uh, I'm afraid of the slippage that normally occurs at a, but okay, let's just take the trade. Let me first of all take this trade here as my first trade for today. We are selling JBP JPY, and our stop loss, they put there the rate. The stop loss is at about 198.541, 198.541, like that. Then our loss amount is just about that. Yeah, it's just about that. And our TP is going to be 20. Our TP is about 195, 195.390. That's going to be our TP, like that. So, yep. So boom, that is it. The trade is currently running. So I'm also going to place it in another account. Now, because of the timing, depending on the broker that you're using and how you know them, mine, I know when it comes to slippage, they are very crazy. And when the market will be closing and opening after midnight, I might be able to really pay hard with the spreads. So I want to be very careful with the amount I'm putting at risk, right? So don't come in the morning and start complaining, oh, you gave a signal, it did not work or something like that. So I'm also going to place this one 195, 198.543. How would you say it? Valid order value. Okay. 195.390. Right. So I'm going to wait. How do I place this one? No. 195.390. Yeah. Like that. So I'm going to place a buy there. That amount like that. Right. So again, I'm going to go to another account. This one now. There's another account here. Trying to massage this account. Go to the chart here. GG. Going into the new order. Stop losses. The idea that many pro firms denied us trade copiers come exist. So if you're trading 3 accounts like me, you're having problems getting all the accounts into one place. So this one is kind of stable. Maybe let me just leave that one. I'm going to sell that. So in that trade, we already in. If you're not in, I don't know what else you want to be. All right, that's a very clean setup as chart. So please let's come together tomorrow and see what would have happened to that. I felt risk 1% in my other accounts because of the timing. I can easily go to midnight and boom, to pig when a spread. But that is it for DJ woman. So those who are following me, please get to monitor and see if at least we can get see many other can scale in. I want us to make more than 9% in that trade alone. It has a very good opportunity. So we might going to look clearly and see how well we can be able to do what to scale in, right? So I want us to be able to scale in this particular trade. So let's go to another pair. Tumesema tukipata entry, slaking, we are jumping with it. That's a very short trade. Come and ask me how you're going to play. Don't miss to fail. Don't fail to make 10% in that trade, right? 10% massive strong. Of course, USDJPY. First look at it. First look at it. This is from the weekly perspective. Um, Same thing, same story here. If you ask me, I can clearly see the reluctance of the price to go either up or down because I think there's this RB here. RB is the rejection block coming here. Yeah, RB is here. It's coming here over here. Oh, by the way, lest I forget, I'll talk about that later. RB is rejection block over here. So you can see price perhaps just rejecting from that RB. And for now, we are trapped. Last week closed very much bearish. And I might be heading to see price. I think has come to tap the collect liquidity below the last week low. We don't know. Uh, let's see. Don't know actually what going to happen for this week. Somehow, indecisive. No clear decision. But from here, we've been a downtrend. We are from here since January. The whole of this year, this market has been a downtrend. And see, and this is the last move from here to somewhere, let's say over here, and price just failed to come here. Now it's coming down, right? Sawa. So of course, in our trading model, we don't capitalize on these higher time frames moves, all right? Because we are just intraday trade. I just want to see what happened for the day, right? So today is almost closing bearish, as you can see. In the 12-hour candlestick has closed bearish, and also this one has it's also okay. So let's go to our analysis time frame. Keeping few things in mind. Number one, keeping that price drop, price. What's happening here? So keeping in mind that this one was the low, this was the high that price printed. This high here, the price printed, and this one just internal structure, and price broke the internal structure. Let me calling it maybe perhaps inducement. This one, in the fire time frame, the 4 time frame, just an inducement there. The price has just collected over it. Let me just call it an inducement in a way. It is not like a break or touch or something, just an inducement. And price now coming from this zone. The fact that price failed to close above the zone or even come to it shows its willingness to continue pushing down. Is very much willingness to continue pushing down in this market. Now, what are the things to mark? Of course, we have a fair value gap, a very big one here. We have a fair value gap over there. Having a fair value gap over there, and that's a fair value gap. If you look at this move, sound more like something. Yeah, look at this move here. Then we have a build up of liquidity here, I don't know why I'm seeing this as a successive move to form something like a double bottom, then react from it as we come to the fair value gap before even pushing down. Of course, ultimately, what I'm thinking of this pair, ultimately, I'm thinking that you're going to sell this pair. Ultimately, that's what I'm thinking. All right, that's what I'm thinking. Now, if I'm going to mark my trend line, maybe perhaps from here, let's see what we're going to have ourselves. Beautiful, right? Very beautiful. Very, very much beautiful. Let's look at our touches. Let's count them. One, combining price action and ICT concepts. Even here, there's an attempted, but let me use this one because it was a very good attempt. There's an attempt over here. Two, a very nice attempt here. Three, and lastly, a very nice attempt over here. Four. All right, good. So what does it mean? Price reacting over from a trend line. All right. So we might clearly see price coming to the fair value gap. Another confirmation that because we had a liquidity sweep over here, a sweep of liquidity, price sweep liquidity, and now there's an inducement collected over here. So in this time frame here, I'm hoping to see price collecting over here and coming to react from a zone over here and take our buy to the fair value gap here. Hapo kuna swali kweli? Do you have a question there? Do we? Anyone with a question there? Just type on the comment. I'll be able to read. I'll read and answer you clearly. All right. That's the only move you need there. So people are trading. I don't know today. You woke up early Monday morning to trade, but you got here and you started scalping and what have you. So it was not worth it. So that's the move that you're really waiting to see. And if that one plays out, 100% go big on your account. Go big on your account. Go big on your account. But there, some people are commenting in the last video, and I think there's a guy said that he made some good money from the signal that I gave. What was it? Nitaanza kuitisha tithe. I'll start asking for tithe in these classes because I'm giving free knowledge here. People are making money and wanasahau wahubiri. So this is USD. It was what was it? Is it USD JPY? It was UJ. It was UJ. So this is the second signal I'm giving. The first one tumeshaingia tuko kwa trade. This one it has not yet come to our zone. So it's zile za kungoja, but again something clean, as clean as such. Very clean price action and a little bit of ICT and you're done. Don't need no need of complicated things there. Just something small, um, and you're done for the whatever that is USD JPY. What else are we going to? CAD JPY. Let's see what CAD JPY has for us. CAD JPY. Of course, we start from the weekly time frame as always. Remember your bado nitawaimbia. I'm still seeing for you. Aha, some tenderness to go up, some likelihood of wanting to go up from this a small move here. Liquidity collected, come down. Oh, good. Try to come down. Now wants to go up, yeah. I think I'm feeling here we're having tenderness to go up. I'm feeling that. I'm feeling that. Because you can see from this order block, price came, yeah, price came from this. Yeah, I'm feeling like cat JPY, this weekly thing might really go up. We want to go up daily. Let's see if we still want to go up or we are tired. So to that move, back here, crossing above this one. Good sign. We are going up, down. Wow, closing above this one again. But now with that thing, with the M pattern. You know what M pattern means? What M pattern means? We still have to retrace a little bit perhaps before going up. A little bit of retracement before going up. A little bit of retracement before going up. Are we together? Let's go to our 4 hour time frame and see what's going to happen over here. Clearly, I don't want to worry a lot about the shenanigans that are happening there. But the very first thing is to have my trend line. The best way I can draw it. That's the best way I can be able to draw it. Yeah, that's the best way I think I'm able to do it at the moment. Let's count. Let us count today. Of course, here there are two already. There are two, but let me just click at one. Let me also take this as the second time it comes to approach it. This is the third time. So 3 touches, we are good. Are we together? We are good. We are good. We are good. Higher. What is it that you can see where price might be coming? Remember, tunajua kwamba we might be want to retrace a little bit, but first of all, we're going up. So here we have a fair value gap. We have a fair value gap over there, where price might always just where price is heading to. Let's see if we still have chances of 5 pips. Ah, yeah, 60 pips, good one. So if you get chance, we're going to take a trade here. If you get a chance of trading, you're going to take a trade over here because we are thinking price is really coming to this one, right? Because you see, this sweep here was not a joke. This sweep here is basically just a sweep. Just a sweep. Look at the price coming here, just sweeping, and now coming like that. See, in inverted head and shoulder. If you look at that, if the pattern, like inverted head and shoulder. Nakumbuka inverted head and shoulder. Just look at this pattern, inverted head and shoulder. Yeah, wale watu wa pattern, inverted head and shoulder. Let's look at that. So this one clearly just tells us the one of thing, a move to the fair value gap. All right. Yeah. So our target actually is just coming to the fair value gap. We don't care whether it will go above or still come below, but just want to see price coming to the fair value gap and perhaps drop even lower or something like that because there's a lot of liquidity just above here and see what's going to happen. All right. So I'll just take this. So this one might have to go to an analysis time frame to see if we're going to have an analysis over there. Go to the analysis time frame and see whether you can get analysis over there. Analysis time frame. Okay, let's see. We're going to get an analysis over here. Let's try 1 hour. Get something in the 1 hour. So in the 1 hour, this is what we saw. So price coming, collecting above, but I failed to take, uh, leaving behind this supply, leaving behind this small supply. Should I come here? Where? Sit here and reduce your opacity. Yeah, and just let's write here 1 hour supply. It's the hourly supply. Price came to the hourly supply and dropped down crazily, crazy. Try to come up, and changing of character just about this particular point here to go up over again. Let's say like a small MSS there, changing character from, okay, let me just call it, don't like calling that change of character, just call it beaver. Yeah, delivery, to just change of delivery, change of internal state delivery. Yeah, like it was like this one up. It means we are changing from this bearish move to an this one move here, and we are approaching the supply. Yeah, so, and that is the, I think this one now is closing just 2 minutes, and you're closing bearish. If I can get an entry, let me see. Is about the, oh, this is, so let's try 30 if you can get able to get something even more clear. Now you see this kind of movement here, this small candlesticks here. This one I don't like, because now there's no way there's no clean entry. I don't know if you understand. It's no clean entry, because if you enter here, your stop loss has to be here. All right, it's below this zone, and where's your take profit? Take profit is just here. 1.7 is not worthy to take trade, so this one, not really. It's not worth it. It is not worth it. Itatupea ile yenye tulikuwa nataka yenyewe mzuri kabisa. But anyway, let's see if we can be able to get some sales from here. It will be good. It makes sense, all right? So tuiwache hivyo tu. We are done with it. Then finally, it's NSDJPY in that category. Finally, it's NSDJPY. Weekly time frame. I think this pair is slowly crouching and rising slowly too. Inajivuta lakini inasonga. That's one thing I'm learning with this pair. It is jivutai and it is moving. Right? So you can see when the year started, this is April or April. Over the past 3 weeks or a month has been what or less I call just an uptrend. From the daily perspective, what do we see? We're able to see a shaggy move there, shaggy move over there. But difference that price is trying, there's a resistance over there, but it's like it's trying to push. You see now analysis time frame. All right, so if you draw our trend line over this zone, brothers and sisters, just make sure your trend line is touching as many points as you can see. This was just a liquidity to dip, all right, not necessarily a break of the trend. No, I call it liquidity dip into the trend line. We have this point here, very nice. We have this one here, very nice. You can just duplicate them, right? Another one here, another one over here. Now price is pushing up from the trend line. So we have a zone over here, a very strong zone. Historically, I think, yeah, just mark. Should I mark the whole of this thing? Let me see. Can we just mark here? Just mark the bodies. So you had a very strong push from the trend line, and maybe this time around there's a lot of liquidity above you. You might see price really pushing even far beyond this level. Because you can see at this level, there's no informed trade you can take because the market's already pushing and going. So there's no informed trade that you can actually make from this market. There is no informed. I'm talking about informed trade. All right. There is no informed trade that you can make from this particular market. So in that case, I'm just going to leave it like that and wait to see what's going to happen in the market in the long run. In the long run. No informed decision to be formed in the long run. That is NZD JPY. NSD JPY higher time frame. Let's paste in here. So you don't have any there, an edge there in the NSD JPY. Don't have an edge there in the NSD JPY. Okay. Yet sauti najaribu kupotea ya. No, but I think right now it's fine now. I'll try to make it happen in a way that we're able to see what's happening there. All right, that is it. Um, how long have you been here, guys? I think you've been here for quite some time now. But now this is week one, and that is it. Let's see if you can be able to make the target of $388 in that case for this week. Um, I've realized that a number of you again watch this video immediately I've posted. So if you're going to watch this video, this is part one. This is part one. An hour, and I think I don't know if you've covered an hour and a half yet, but I think just like an hour there. So I'm going to stop here, and we meet later on, maybe from about 10, about 10, about 10. I'll also be breaking down other pairs from about 9. 9 we meet. I'll do the CHFs 9 to about 10:30. Then perhaps early in the morning we'll do the USD. So you take your time to do your analysis. Make sure you're doing correct analysis. Let's wait and see how this one would play out in the market. Trade responsibly. So what I felt, I was to mention that somewhere about around December there, we are planning on our first ever mega forex expo. Venue and other details I'll keep on communicating as we go. So make sure it's going to be a free event, but a big one of its own kind, hosted by Wastani and some other traders that I'm working close with. Uh, just remain rooted. I'll keep you posted. So let's meet at 9 p.m. thereabout my time, East African time. Let's meet at 9 p.m. East African time for further analysis. Monday is just analysis day, so we are not yet done. We are not yet done. So let's meet at 9 p.m. for more analysis. See you.